Welcome back. We'll continue our focus on commodities, but we're talking about agro-commodities now, domestic commodity prices, if you like, with Ada Akonobi, who is a research analyst with Financial Derivatives Company. Good morning to you.
Good morning,
and thank you so much for coming on the program this morning. So, looking at today is decision day, and everybody's quite anxious to know what decisions will be announced. A lot of, conversation has been on an increase in monetary policy rate, maybe cash reserve requirement, and maybe also a shifting on the stance of forex management. But taking a look at it holistically, what impact do you think, if any, will the MPC's decision have on consumers' prices outlook?
Okay, well, we predict that the decision from the MPC decision, they will have to introduce a dual exchange rate system. So you have two markets. One will be for the essential markets, and the second will be for non-essential markets, and the third, which is the problem market anyway. So it seems like that is an easier way to swallow a hard pill rather than being quite rigid, at devaluing the currency down to just one figure. Increasing, well, before the prior to the release of GDP figures on Friday, we speculated that they would increase MPR, but now, I mean, with the contraction in GDP growth, is it good to increase MPR as it is? MPR might remain flat, CRR might remain flat because we still need to spur economic activities in the country. However, even before the previous MPC meeting, when interest rate was reduced or when the MPR was reduced, banks are not lending because of the extremely risky environment for banks to lend right now because of all the uncertainties. So, but we still, I mean, this is the most highly anticipated MPC meeting because everyone is looking to see where the government is going and if they will, for once, have a very clear exchange rate policy. We know that our reserves, or rather our our revenue are dropping because of the massive decline in our oil production. At 1.4, it's quite alarming because we need to export and have some sort of a revenue come back into us. So there's a lot of, and high inflation figures, so there's a lot of tablets to chew as it is now to give some sort of direction to where the country is going. And investors, foreign investors are looking as well to know what's going to happen so we can have more inflow of investments coming to the country if there's a very clear exchange rate policy set.
But then looking at the commodities, we still see a price hike has continued, taking a look at the elastic commodities as well as the inelastic commodities, particularly around tomatoes and well, cassava, if you like. That's Gary.
The price hike will continue. Like we say, the major reasons are the dollar scarcity, the hike in fuel prices. However, in April, the average price in the country was about 163 naira per litre. And with the nominal price now at 147, prices of goods will still go up, and price of diesel prices have increased by 10% to 143 anyway. So problems still persist. There's still dollar scarcity. Transportation costs are high. Now you see that services as well. Prices of services will go up because people need to transport, and we see that low disposable income is already leading consumers to ask for aggressive demand for a wage increase. So there is just a lot of uncertainty as to what is happening, but we expect food prices to keep going up pending any decision. But this has a domino effect anyway, because if there is some sort of direction on where the exchange rate is going, that will somewhat trickle down into the cost of prices in the long run. But then we shouldn't forget the fact that there's still this is planting season. Typically, food prices at this time of the year is somewhat high, but towards the fourth quarter or third quarter of the year, this is the harvest season and food prices come back up.
But then this is the first time I think, yes, food prices around this period are usually high, but not as high as we've seen it in the last couple of months.
Not as high because of what is happening right now, the exchange rate distortion, the increase in fuel prices, and other issues. Well, for tomato, it's extremely high. This hasn't happened in a really long time. Yes, typically by this time of the year, tomato prices, there's scarcity of tomato from February to March. But because of the pest disease, which is the Tuta absoluta, that is increased. That has spiked tomato prices as high as 400%. So what we see now is that it's too expensive for our for domestic buyers. So what they're doing now is they're going to neighboring countries like Niger, Cameroon, and Ivory Coast to buy tomatoes into the country. And tomato farmers are discouraged because there is no government intervention, and they've warned or they've advised or asked the government to please help in producing high yield seeds and heat resistant quality seeds, so that they can produce and it lasts longer. But then there's been government interventions, but it seems like this has been moving towards people that have no interest in agric practice anyway. So if that is tackled, if more emphasis, if the local farmers are encouraged, you have more farming activities, and we'll be able to build and feed the local population as well as export.
Ada, thank you so much for coming on the program and sharing that perspectives with us.